On to our next speaker, who is Lauren Hendricks. As you know, our name is the Microcredit Summit Campaign, but we recognize that more than credit is needed for people to move out of poverty, for people to take advantage of the opportunities that they have or withstand the shocks that come their way. Savings plays an important component to that as well, and Lauren will talk to us about the Access Africa program, which uses the savings group methodology to serve rural poor people in Africa.
Great, thanks so much, Larry. Can everybody hear? Am I good? All right, well, thank you so much for having me. I represent a specific project or program at CARE USA called Access Africa. And the goal of Access Africa is to reach 30 million people across sub-Saharan Africa with access to a basic suite of financial services, so savings, credit, insurance, and remittances over the next decade. And CARE has really chosen to focus on Africa for several reasons. It represents the continent with the highest percentage of people most excluded from financial services. It also is the continent with the highest percentage of people living in extreme poverty. And we think that there is a correlation between those two, and if we can increase access to financial services and financial inclusion, we can directly impact poverty. At the same time, CARE recognizes that people are excluded from formal financial services in Africa because there is a lack of financial institutions that have the ability to reach them. So we focus on something called Village Savings and Loan Associations, which is part of a larger savings group movement, which is really sweeping Africa. And so, let's see if I get this. I'm pressing the down arrow, but I am not succeeding. Maybe. There we go. No, that's the end of the show. Okay, I said I was going to be able to do this, but there we go. You can get the presentation in reverse. There you go. So I wanted to explain just a little bit about what the savings groups are before I move on. And I know many of you know this, but just in case for those who don't. Village Savings and Loan Associations are savings groups. They are groups of 20 to 30 people, predominantly women, who come together to pool their own savings on a weekly basis, and then after a period of time they are able to start borrowing from that common pool. There is no external capital put into the savings groups. The groups are funded entirely by their own savings, and they are able to, after a time, start to access loans from their own member savings. The groups also include something called a social fund. That social fund is a small amount of money that is put aside on a weekly basis by the members to help cover emergencies. So it operates as a very small insurance fund for the group. One of the things that's unique about the savings group movement, which is a little bit different from what we know as the self-help group movement in India, is the annual share out. So when the groups form, they are time-bound. And at the end of a period of time, usually a year, but sometimes anywhere from kind of 8 to 18 months, the group shares out. So all the money that has been saved into the common pool is returned to the members, and any interest that has been paid on loans is also returned to the members. So the members tend to receive a fairly high return on their savings on an annual basis, and anywhere from 20 to 80% you might see annual return on savings. And people really value getting that kind of lump sum of cash at one time during the year. For many of the people that we work with, they don't handle lump sums of money at any one time. They may have small bits of money that they handle, but having a lump sum that they can invest in something, whether that something be housing or an income generating activity, is very valuable to them. There we go. There are many strengths to the savings group methodology. One of those strengths is the ability to reach extremely poor households in extremely remote rural areas, and to reach a large number of women. And so I know that many people are interested in who we're reaching, and I see Sherry out there, how they disaggregate below $2.50 a day, $1 a day, national poverty lines and food poverty lines. So we are working on collecting this data across our entire 26-country portfolio. So I have presented those that we have available at this point. And you can see in some countries we are doing a very good job of reaching a very large number of households that live in extreme poverty, and in others we still have a ways to go to make sure that we're reaching who we need to reach. These numbers are based on, I know this question will come up, our Malawi numbers are based on a randomized control trial study we're doing with Innovations in Poverty Action and the other 4 countries are based on household surveys we're doing using the Progress Out of Poverty Index. So whoever was going to write that question can stop now. I think one thing we're learning is that in countries with high levels of poverty, we are not doing a particularly good job at targeting just the poorest households. What we are doing a good job is mapping fairly closely what the poverty profile of the country is. So you can see kind of in Tanzania, where there is a high level of poverty, our numbers aren't so far off of the national numbers in terms of households living below $2.50 and below $1.25 a day. In countries like Egypt, where you see a lower percentage of extremely poor households, we're maybe doing a little bit better job at kind of targeting our activities towards poorer households. So you'll see that there is, we're doing a better job at reaching kind of the households below $2.50 a day than the national average. Just to give you kind of a sense of our numbers, last year, CARE reached 557,000 new clients across 26 countries in Africa, and we're just closing in on the $3 million or 3 million client mark across those countries. So 3 million reached, 27 million to go. One of the other real strengths of the VSLA methodology is flexibility. So there is quick dispersal of loans. The day that the group decides to give you a loan is the day you receive the loan, and there are usually typically relatively flexible repayment periods. So the group is usually flexible about rolling your loan over a month if you're unable to pay, primarily because they know each other and they understand the reasons why someone might be unable to pay in a low month. The group is also extremely informal, so there is a very low cost to the members in running the group. There's no cost other than their own time to participate. And they are able to handle savings, something which most regulated or supervised microfinance institutions in Africa still aren't able to do. The methodology also has weaknesses. The funds available to members are limited by their own ability to save. So particularly during times when many members need funds, like during agriculture planting season, there tends to be credit rationing. Not all members can receive the amount of loan that they need. The annual share out tends to decapitalize the group, and then they have to start all over again. Many group members, particularly in later cycles, will take part of their share out and recapitalize, but still it's problematic for the group. The other issue is it doesn't help move people into markets, and for many of the groups that we work with, because they live in these kind of remote rural areas, linking up to markets and actually finding income generating activities that they can start to engage in is still a challenge. I want to talk about kind of some of the benefits of the VSLA methodology. So I think one of the other benefits is it allows people to provide services that are generally small and frequent, and that these types of services are very difficult for the formal financial sector to provide. So I realized that Gautier gave this really inspiring presentation from the typically, more number-oriented microfinance institutional side, and now I'm coming from the savings side, and I'm kind of the one giving the dry number-based presentation. And man, I regret it now after having Gautier did his wonderful presentation. But I wanted to give you guys a sense of kind of the level at which people save and the frequency. So people save on a weekly basis. And you can kind of see by some of the numbers the average savings per member across different countries. So, you're seeing in Burundi people saving in very small increments, and over the course of the year, halfway through the year, they've only accumulated $4. So they're able to save in these very small increments that for a formal financial institution would be very difficult to deal with, saving in 15 and 20 cent chunks on a weekly basis. At the same time, they're able to access very small loans, $6, $57 is the high in Tanzania, but able to access these very small loans very quickly when they need it. Okay, so I'm not going to go there yet. Going back. So one of our points around the kind of savings-led financial programming is that these types of informal activities should be included as part of a broader strategy for governments, for donors, for development institutions. A broader strategy for financial inclusion. Financial inclusion should be about people being able to access convenient and affordable financial services when they need it in order to manage their households and their businesses. Whether those services are formal or informal shouldn't matter in the broad scope of financial inclusion. At the same time, I think we can all recognize that there are limits to what informal financial structures are able to provide to households, and that some households in the VSLA program and some groups will have a need for more sophisticated financial services. And VSLA certainly doesn't meet all of our typical households' needs. Some of the needs that they have that aren't met by the VSLA are long-term savings. Many people realize that they have these events coming in the future, whether it be their need for a pension when they grow old, whether it be the need to put a child through secondary school, whether it be the need to save for a marriage. And VSLA doesn't allow for that. It also doesn't allow for lumpy savings. So during harvest season, when people might have more cash in their hand, because VSLA is essentially a community-based commitment account, it's very difficult for them to save that extra money that they have. And it also doesn't provide insurance and risk mitigation beyond kind of immediate emergencies like a death or a health crisis. So things like crop insurance aren't provided through the VSLA. So CARE has embarked on a series of pilot initiatives looking at how we can try and link village savings and loan groups into the formal financial sector by linking them to formal financial institutions. Now, there are a lot of challenges to this. One of the challenges just being kind of physical proximity. In a survey in Malawi and Uganda, the average VSLA group lives 26 kilometers from the nearest tarmac road, not to mention the nearest financial institution. So just the physical distance that most of the groups have from financial institutions is a challenge. Regulatory issues are a challenge. In some countries, linking an informal group to a formal financial institution isn't allowed according to the regulatory framework. And in some cases, the regulatory framework is just kind of vague on the subject. And in that case, financial institutions are reluctant to enter into the relationships. Institutional capacities, both on the side of the VSLA groups and their skills and ability to link to a formal institution, and then formal financial institutions' ability to design products and services that meet the needs of VSLAs. And client preparedness. And that's an issue that we have been working on around the issue of financial education and preparation for moving into the formal financial sector quite a bit. So Access Africa has some kind of linkage strategies that we've been implementing as we start some of these pilot initiatives. The first one is to start with simple products. The products that the group members have available to them in the VSLA are relatively simple. We don't want to introduce very complicated products during their first time interacting with a formal financial institution. And predominantly, we always start with savings as we move to linking them to a financial institution rather than credit, because savings, again, is something that they're already familiar with. There is already a high demand in the group for accessing formal savings. As the groups get older, they tend to have a lot of cash, particularly at the time of share out. We have groups that share out $8,000, $9,000, $10,000. Keeping that, back in this metal box makes people nervous. So the ability to take excess liquidity when they have it and to put it into a formal institution where they know it's safe is a service that's very highly in demand by the members. The other strategy around is to build on the core principles of the VSLA. So when we link them to a formal financial institution, we're not asking the VSLAs to transform or to change their practices in any way. We're asking financial institutions to develop products and services that fit the VSLA members. So Tanzania is a good example. We have 450,000 VSLA clients in Tanzania, larger than any microfinance institution. We don't feel like our VSLAs should change to meet the needs of the financial institution. We feel like the financial institution should develop a product that fits the needs of the village savings and loan. But we're also interested in building these win-win relationships with financial institutions. The product that they offer the VSLAs should be one that makes a business sense for them. And I wanted to give the example of our partnership with Larry's old organization, OIBM in Malawi. OIBM has a mobile van that comes into communities and really helps them extend their outreach to the rural areas. We have been able to link up with OIBM, and they started by offering savings accounts to VSLA members, and they've now just started also offering credits to those VSLA groups. So since we started the pilot, we've seen 484 VSLA groups, so that represents a little over 12,000 VSLA members. So those groups have opened group accounts, group savings accounts with OIBM, and are able to save into those accounts. It's interesting because we have then seen an additional 2,145 individual members from those groups spin off and open their own individual accounts. They haven't left the VSLA group. They still value the services they get in the group and they still participate, but they in addition then open an individual account and start saving for their own needs separately as well. And then now 35 VSLA groups have access to credit from OIBM, and that credit is on average $610 per group. So for each individual member, it represents only about $20. So from a financial institution point of view, it would never make sense to make $30, $20 loans, but to make one $600 loan to the group makes a lot of sense. I also wanted to give the example of our Banking on Change project in Uganda. In Uganda, we have a 5-country partnership with Barclays Bank. And so Uganda was the first country in which Barclays started offering savings accounts to VSLA groups. And you can see a little bit there, the numbers of groups that have opened accounts, 118 so far. I think one of the interesting factors in that is that we targeted initially and offered the accounts to 210 groups. And about 118 have chosen to open accounts so far, and then another 33 are going through the training process. So I think that there is some concern when we talk about linkages to financial institutions that it is an automatic process and that all groups would be compelled to link. But it is very much a demand-driven and performance-based process. Not all groups are eligible based on their financial performance, and then not all groups that are eligible choose. Only those who see that they have a need for those additional financial services. And then I would talk a little bit about some of the ways we're overcoming some of the challenges of financial linkages. And one of those ways is by using things like the mobile money platforms, or using M-Pesa in particular. So we have started in Tanzania a pilot with M-Pesa, offering M-Pesa to the groups not as a transaction platform, but as a short-term savings platform. So the groups are able to open savings or open accounts with M-Pesa, and then they can move excess liquidity into that account when they have it, and then they're able to draw it down when they need it. And I wanted to just... So this is, if you've ever been to Kenya or Tanzania, this is kind of the advertisement around M-Pesa and the women that they target. It's kind of suave urban woman in a professional or a university setting. And this is the typical VSLA member. So it's not exactly the same client. But the M-Pesa has really gone a long way towards kind of extending the outreach of financial services into rural communities. And we find that over 40% of VSLA members, if they don't have phones when they start the program, have phones by the end of the first year. And so being able to link onto these mobile money platforms can really extend the reach of financial services. And although right now what we're using M-Pesa for is this really a short-term savings account, we are in partnership in Kenya with Equity Bank and Orange for Equity to open savings and overdraft accounts for VSLA members using the Orange platform. Similarly, we're in partnership with Mwanga Community Bank and Tigo. Tigo is a different mobile provider in Kenya who runs a system called Tigo Pesa. In partnership with Mwanga Community Bank and Tigo Pesa for Mwanga Community Bank to offer savings and credit accounts to VSLA clients and for them to be able to access those accounts using Tigo Pesa. So I think the exciting thing about the mobile money platform is not only the ability to do the transactions, but the ability to link in to a formal financial institution on the back end. And I always use this example, but in Uganda, we run our programs across the country, but up north in particular is where we focus. An area of the country that has gone through its share of struggles. And the people who live there are extremely poor and are extremely excluded from their communities and from their society. And if you think about a woman who started saving 10 cents a week in her community group and is now saving $5, $10 a week, but also she has this Barclays card, and she is a member of one of the most kind of top-of-the-line banks, not just in her country, but in the world. And they really love those account cards with their pictures on them. And to them, it's not just about financial inclusion. It is access to financial services, but it's about being included in their economy and their country and in the way that they see their country moving forward. So it's well beyond just financial inclusion. And I think it's an important thing to, for many of the women, this may be the first card with their picture on it that they've ever had, the first ever kind of real documentation and acknowledgement. So it's really important to see them start to link into the formal sector. Okay, so Gautier had his ladder and we have ours as well. I think one of the things about care, and one of the things we all see about reaching the extremely poor, is that while financial services is certainly a need that they have, it's not the only need that they have. These households have multiple issues and multiple underlying causes of their poverty and their vulnerability. So CARE really tries to use our Village Savings and Loans program as a platform for these women to start to engage with other kinds of development initiatives. When you look at some of the underlying causes of other issues, if you look at the issues around kind of maternal health care and women seeking pre- and postnatal health care, one of the biggest causes of their not seeking care is their inability to access and control resources at the household and to make decisions about whether they're going to use those resources for their own health care. And so by giving women the ability to participate in a VSLA, to control their own resources, you're actually increasing their ability to access pre- and postnatal health care. At the same level, we do a lot of work on combining our Village Savings and Loan programming with our agriculture and marketing programming, because that's often, if you see groups that have very low loan fund utilization rates, i.e. money is sitting in the box, it's not being borrowed out by the members, it is because they don't have a way to invest it, or they can't think of a way to invest that money productively. So starting to link them into value-added agriculture is very important. And so my last point, very conveniently, is just around our numbers, and I wanted to tell you a little bit about how we reached our numbers. So our goal is to reach 30 million people, and this is how we got to that number. So there were approximately, or 2 years ago when we started this program, because we all know growth rates in Africa, but there were approximately 725 million people on the continent, 550 million of whom live on less than $2 a day. We decided we wanted to reach a quarter of those people, which equals about 140 million people. And if you divide that by 5, with the average kind of household size, that gets you to about 30 million people that we're going to try and reach. So our goal is to try and reach a quarter of the people living in poverty on the African continent over the next decade. And I wanted to put this challenge out to the rest of us because we have seen these extremely high growth rates in other parts of the world, in Bangladesh and India. And I wanted to challenge all of us that there's no reason we can't have these high growth rates in outreach of financial services in Africa. And it's up to all of us to start to kind of push the envelope on how we get those services out there. So with that, I will say thank you very much for letting me present.
Thank you very much, Lauren. Thank you for presenting your program, the strengths and the challenges that you face and how you're trying to address them, and for the vision that you have. Please pass your questions in to the volunteers. And Lauren, since you gave us numbers, I'll give you a chance to give us a story. Tell us about someone who inspires you.
All right, well, so I always have a woman whose story I tell. I very seldom ever tell it without crying, but I think I'm going to make it today. So there is a woman in Burundi who tells a story about when she started her program. So when she started the program, when she was growing up, she got sick, she tells it, and she developed a limp. So I'm not sure if she's not sure what she had, some form of polio, or I'm not sure. And so growing up, she was always teased and ridiculed, and she was the handicapped one. But her mother always told her, no, that's not true. You can do anything, you can succeed, you can be what you want. So she was very excited when she was young that a gentleman came and wanted to marry her, and she got married. The story's in Burundi. I don't know if you guys know Burundi very well. Domestic violence is endemic there, and it is cultural. There is a saying that if you beat your wife for the first 3 years, she will obey you for the rest of your marriage. So Anyway, so she was a victim of domestic violence and beaten very regularly by her husband. When she wanted to join her VSLA group, he objected, and she did it anyway because she felt like this was her one chance. And so she joined the group because her mother had insisted that she stay in school when she was young. She was one of the more literate members of her group, and so she was elected to be the treasurer because she could write down her notes. She eventually, by doing well at that, was elected the chairman of her group. CARE runs a system called Village Agents where we train group members to start up new groups. So because she did so well running her own group, we trained her and she became a village agent, training other groups. And because she then became known around her community for that and respected for that, she got elected to her village council. And then from her village council, she was then sent to represent her village at the district council. And so I think of the story of how she's gone from being this beaten woman with no options and teased and ridiculed to representing her entire village at the district level. And it's interesting telling her story because also she tells about how she used her loans. And her first loan, she used to buy food. And her second loan, she used to buy seeds for the household. And when she tells her story, she says, that was the first time she ever contributed anything to her house or felt like she contributed anything to her house. And how stunned and surprised her husband was when she walked in with that bag of seed. And then the third thing she used her loan for was to buy a pair of pants for her husband. And I always think that if I was in that situation and being beaten down by him, pants probably wouldn't be what I bought him. But she said when she brought those pants to him that he hugged her, and it was the first time, see now, I didn't make it. It was the first time he ever hugged her. And I think what her life must have been like to go through it without physical affection. And how just being able to have access to a small amount of money, I'm sure they weren't new pants, I'm sure they were used, and being able to control how she spent that money just changed the dynamic of her relationship with him. And in the end, she started a business, he came and worked for her and supported her in that business, and she ended up on the cover of New York Times magazine. She was profiled in Half the Sky. And we brought her to the U.S. To tell her story, and I just think the journey that she went on in her life. And I always say to everybody, nobody, not CARE, nobody gave that woman a dime. Everything she did to change her life, she did with her own resources and her own mind. So I just think it's a great story.
Thank you. Thank you. So if it's any consolation, Lauren, I didn't make it either.
Oh, good.
Okay, a lot of questions here about interest rates and how they're set and how they're charged, and if people are earning high rates from these, that means they're paying high rates. So tell us about how the interest rate works, and does it mean that people who save more get more advantage out of this than people who borrow? And if there are high rates that are being charged, do people borrow from other sources to put them in to earn more money later? So let's hear about that whole part of the transaction. Yes, so it is a controversial part of the system for sure. The group members decide on their interest rate. That being said, there's an awful lot of groups that choose either 5% or 10% monthly interest. So it has something to do with the ease of calculation, in that if you get a $20 loan, it's easy to calculate that 10% of that is $2. And we're dealing with a fairly low literate population. And the $5 tends to come up in Islamic communities because they do their math more based on fives, apparently. I don't understand, but apparently 5 is an easier interest rate to calculate if you were educated in an Islamic tradition. I also suspect that at some level, CARE village agents kind of promote the 10% because of the high returns on savings and because it's easy for everybody to calculate. I think one of the things that
But people still like it. When we go in and try and have conversations with groups about, you could lower your interest rate, they actually really, really like getting that big lump sum at the end. So most members would like to keep the higher interest rates so that they get back a higher lump sum at the end. It does mean that, net savers sort of win out over net borrowers in the system because net borrowers end up paying more and net savers end up earning more. One of the things that we've counseled is that they move towards linkage with financial institutions because, with Barclays, I think their interest rate is 15% per annum. So there's a big spread between what they get the loan from Barclays and what they lend it out internally. And you can kind of manage these high spreads on relatively small loans, but on larger loans, $100, $200, the high spreads can become difficult. So we really try and counsel them to, as they're getting external funding, to start to try and lower the internal interest rates.
Okay, good. Some more questions on just the mechanics. What's the thinking behind this annual payout? I mean, if people need this service, why stop and start over again?
Yeah, so there's two reasons for it. One is that it sort of functions as an audit. Again, because people have relatively low numeracy skills. It's a time, and trust is low as the money builds up. It's a time when physically all the money comes back and gets counted and everybody can see that it's there. So there's little opportunity then for kind of internal fraud in the group. So it serves as this action audit. Also, people really value the lump sum. People save for something. Some of the groups set a goal at the beginning. We're all going to commit to save enough that at the end we can each buy a goat. Or they all know that the share out comes at planting season when they're going to need to buy seeds and fertilizer. But they need that lump sum of money for something, and they really value getting it. Now, later on in years, we do see groups, particularly when the share outs get larger, we do see groups that will say, okay, I'll agree to keep half the money and we'll recapitalize the group with half the money. But even if they do that, we want all the money to come back and get counted so that there's that kind of audit of it.
Okay. A question about reaching the very poor, because Gautier talked to us about people who had nothing and needed transfers of cash and assets. Here they have to be paying in to start. So are you really reaching the very poor if someone has to have an income or a source of money to even be in the program?
Well, I mean, I think the answer is yes and no. We're reaching very poor. Are we reaching the most poor? Is a different question. I believe wholeheartedly in the types of programs that Gautier is working on. I believe there are a level of people who are so poor that the first step for them needs to be some sort of support, whether it's government support, whether it's a program like Gautier's. I think that level of person needs support. I think VSLA is a great thing to bring in with it. In several countries, in Ethiopia, in South Africa, South Africa has a huge government-run social safety net program. I think VSLA is a great thing to bring in on top of that. So as people are receiving transfers, they're able to start to save some of it and put it aside to use for productive purposes. So that, again, so in some countries, Ethiopia being an example, we use VSLA as kind of a graduation mechanism for some of these government social safety net programs.
Okay. There's also a question about the loan terms. How long do people borrow money for, and how quickly do they have to pay it back? And then with that, a question about how do people deal with shocks or unforeseen events that come up? How does this help them weather those things?
Yeah. So the loan terms are set by the group, and they can be quite flexible. So one person in the group may say, I want to do peanut trading this month. And so I'm going to go buy peanuts and sell them over there. So they only need a 1-month loan. Whereas another person may say, well, I would like to take my loan for 3 months because I'm going to, weave baskets, and that takes a long time to do. So the group can be flexible in terms of the loan terms. And you see a lot of that within the groups. As for shocks, actually, we're just getting back one of the things that the group does very well is because they have this emergency loan fund or the social fund. If an individual member has a shock, whether it be an illness or a death in the family, they're able to help them through that from the emergency fund, and they can And it's the group's choice. They can either give a grant out of the emergency fund or the social fund, or they can give a no-interest loan. And so depending on what the emergency is, they make their choice about how they're going to use those social funds. But actually, we're just getting back. I didn't put up any of the results from our impact surveys because we started in 2008, so we're just now starting to get that data back, and it's not finalized yet. But a lot of the data we're getting back from both the randomized control trials and the impact studies that we're doing indicates that one of the biggest benefits of the SLA, particularly in the first year, is around resilience to shocks. So when households experience shocks, because they're able to borrow out of the fund or to access their savings, you see that there's less selling off of assets, less selling off particularly of livestock, and so households are able to weather those shocks with their own savings rather than having to sell off assets, okay. Productive assets.
Good. Last question, what about men? Don't they need this service too?
So we're about a 70-30 group, so we have about 70% women and 30% men. Some countries are exclusively women, some countries are mixed. One lesson we've learned very well is that men-only groups don't work. And I don't know, I'll leave it to men and anthropologists to decide why men can't be in groups together. But, I do think traditionally, women tend to get together in groups, particularly in Africa more anyway. What we find often is that when we go into a community, when we first call the meeting, lots of people come. We first explain the program and then explain that we won't be putting any money into the groups. Most of the men leave. And the women start the groups. And then when the men see that the women are succeeding in the groups, then they come and want to join. So men tend to be, in our experience, late adopters of the methodology. We have some research going on right now to look at, there's a camp within CARE that says we should do all women because then it's a safe space for them to talk. And if you have men in the groups, then men just take over. And then we have another camp that says men should be in the groups because then, they tend to be the most tied into business anyway, so they can help mentor some of the women. And besides, it's a forum where men and women can function as equals, and men can see women succeeding in business, and isn't that a good thing? So we have some research right now going on looking at the actual financial performance of women-only groups versus mixed groups.
Okay. Thank you very much. I'm sorry we didn't have time for all of your questions, but thank you, Lauren, for a great presentation and for your answers to the questions. I'd like to thank both Lauren and Gautier for helping us see inside their organization how it works, what makes it work, and how we can learn from what they do. Please take out your evaluation forms out of your bags and fill out your evaluation of this session. Directly after this session, there'll be a short break. We're running a little bit late, so the next session, the next plenary session will start at 3:45, so we'll start 15 minutes late. All of the summit's plenary sessions and the workshop sessions will be audio recorded, and a CD with all the recordings will be available for purchase at the registration desk at the time of the closing ceremony tomorrow. It will cost €10. And that's all the announcements I have. Thank you very much for joining us for the action plans, and thank you again to Lauren and Gautier.